On 10 August, Thruvision announced an Asian airport deployment expected to generate more than £3 million of revenue. The report says the work will cover multiple major airports in Southeast Asia, and shares later jumped 46% to 0.91 pence. That headline looks unusually large beside a market value of roughly £4 million after the rally. But expected revenue is not the same as profit, cash, or a completed delivery, so the first impression already needs qualification. The immediate answer is that the contract changes the scale of the opportunity investors can see. The more useful question is whether it changes the quality of the business, because that requires repeat orders and successful execution, rather than one large announcement.
Thruvision said this is its third Asian contract worth more than £1 million within 14 months. The company also described it as the second major regional order in the 2026 calendar year and its largest deployment in Asia. The orders are being secured through a principal regional partner rather than through a fully disclosed direct sales network. That matters because repetition gives the strategy more credibility, while the unnamed partner and airports leave the commercial concentration risk unresolved. The second answer is therefore stronger than a one-off contract story. The Asian pipeline has produced multiple sizable wins, yet the evidence still stops short of proving a smooth earnings stream because the reports do not show the contract margin, payment schedule, or future order cadence. The deployment focuses mainly on airport worker screening and insider threat mitigation, not only on passenger screening. Thruvision's technology is designed to detect concealed metallic and non-metallic objects as people pass through. That use case gives the order a more durable rationale than a generic technology sale. The reports describe aviation security as extending beyond passengers, but they do not quantify how much of that need becomes recurring revenue for Thruvision. The third answer is that the demand appears commercially intelligible, but the earnings quality remains conditional. Delivery is expected in the second half of the financial year ending 31 March 2027, so the market is pricing a future conversion of demand into reported results.
Thruvision says its systems are deployed in more than 30 countries, which places the Asian order inside a broader international footprint. The current announcement adds evidence of expansion, but it does not by itself reveal the economics of that installed base. The unresolved issue is now precise. Can this partner-led demand become earnings that arrive on time and at an attractive margin? The available reports answer the demand question better than the profitability question, and that distinction should remain visible. The strongest current judgment is conditional progress, not a completed transformation. The 2027 delivery window and the first reported revenue and cash conversion from this order are the checkpoints that can decide whether the £3 million promise deserves to support a durable business re-rating.